Hey, what's up, traders? Coldwater from Phantom Trading here. And in today's trading psychology video, we are going to talk about when to actually stay out of the market. So there are going to be a handful of scenarios where it actually makes sense not to trade, and where you should probably just be sitting cash. So this is more applicable to those of you who trade the 15 minute, of course, because when there is less volatility in the market, sometimes you can't expect much of a move out of it. I'll talk a little bit about how December went as an example. Same with January actually. But obviously, if you're on the 1 minute, same thing can happen as well. Market conditions aren't always going to be ideal, right? There are going to be certain months out of the year where prices just don't move the way that you're expecting it to, and our edge is not going to be as effective as it is in the market conditions that we've trained it for, right? So in the case of December here, as you guys can see, right, we had extremely rangy price action for the majority of December leading up to January, right? And it makes sense, right? It's the holidays, not a lot of volume in the market, right? There was, of course, volume earlier on, right? If we go and look at, just basically December, let's see here. If we go to December 1st, right around here, and we look at December 1st to the 15th, right, we had a good 500 pip move or range, really, right? So we can see here, right, we had movement, we had volatility. This price action is way better, right? It's not choppy. There's large swing moves in the market that you can capitalize on, just taking longs, right? And then if we start to look at the second half of December leading up to Christmas and the holidays, right, looks like we have a similar range if I mark out the whole thing, right? But if we look at just this little range here, right, leading up to, this is actually January over here, leading up to December 25th, right, and even after the 25th, leading up to New Year's, we can see here we have about a 250 pip range, right? And you can just see prices a lot choppier. This is more difficult to trade, whether you're trading the 15 minute or 1 minute. Because the thing is, you're going to use the 15 minute to trade the 1 minute with the way that we trade anyways, right? So certain situations like that, you may or may not want to, actually engage with the market. But personally, what I did over December is I still traded. In fact, I traded the second half of December leading up to Christmas. And all I did was adjust, my TPs a little bit, rather than trying to shoot for like 5, 6, 7, maybe 8 or 9R. I'm looking at taking at most 3 to 5R, or even less than that sometimes. I think there's a couple trades that I took that were just 2R, right, where I just felt, okay, the market's going to reverse on the day, there's no point in staying in this, I'll take my profit. It's December, right? I'm not, I know that we're in this choppy market condition because we can see prices printing that way, and we're not in this super volatile price action that September, November, and early December had, right? So when you see that market conditions are slowing and we're extremely rangy, you don't need to trade it, right? Same goes for the second half of January here. Now, obviously, the start of January, price went on an absolute rip, and we had a lot of volatility out of the gate. But the minute I started trading, which was in and around mid-January, price started to range quite a bit, right? So again, if we compare it, right, let's look at January, what looks like the 6th here, to January 15th, and we can see that we have, some pretty good movement, about a 400 pip range, 450 pip range. And then if we look at the last couple of weeks of January, leading up to the start of February, we have about a 184 pip range, right? So again, volatility is always going to range like this. You don't always need to be in the market, right? If you're going to try to trade this, whether it's on the 15 minute or 1 minute, and price is going to whipsaw and tap you out and all of that, I mean, again, you don't need to engage with the market. There's nothing wrong with sitting cash, and this is part of building your patience muscle at the end of the day, right? So that's kind of the first thing, right? If conditions aren't ideal, December, January, sometimes August, June, July, August, it depends. I mean, I've had good months, June and July. August historically I find is really weak, like not weak, but really choppy, similar to this. Not a lot of volatility, so maybe you don't want to trade it. right? And then look, the next point that we're gonna go over is whether or not there's high impact news for that week. So if you guys are aware, it is currently February 3rd, and today we have NFP. So we actually have a super high impact news week, right? And that's part of the reason that we had a lot of choppy price action leading up to these major news releases. So I believe there was a Fed rate decision on the US dollar. So of course all the major pairs, the US dollar pairs, they ranged around until that Fed rate decision was actually released, right? So any high impact news, you probably don't want to trade either. And I know some people trade it. I think it's okay to do it if you like trading fundamentals. Personally, I don't. I've been slipped before. I've said it multiple times. Actually, I've seen people get slipped for a lot worse than I've been slipped even. So it's the risk you take if you're going to try to trade that. And of course, if you're trading with a reputable prop firm that doesn't allow you to trade news, then you risk blowing your account, right? Because you're violating one of the rules that they have in place. So whether or not you want to trade it, I think there are certain prop firms that allow it, but they don't guarantee that they're going to pay out, right? If you trade news, because there's no volume in the market when news hits usually, right? Which actually causes a lot of volatility, right? Basically, it causes price to gap in a way, right? So that's a big one as well, right? Avoid trading high impact news, right? If we look at today, NFP actually released at 8:30. I didn't trade it. In fact, I'm not trading today at all. It's Friday, and again, NFP hit, and there's no real setups for me here, right? If we're looking at GU, same with EU. Maybe I'll look at Nasdaq, but what can you really trade here? Even on the 1 minute, I mean, unless you want to try to chase the move, and potentially get swept out, it gets very unpredictable. Personally, that is not a strong suit of mine to be able to trade news. There's certain traders on the team that are able to do it, but even then, most of us just stay out of it. It's not worth the risk, right? So that's a big one. Obviously, if it's a high impact news week, maybe avoid trading, or if you are going to trade, set your targets lower. I was in a trade last week where we had again, this very choppy price action. I actually live streamed this on Discord for the community. I was in a position, it was running about 2R. Let me see if I can actually find it. I think it was on EU. So if I just control tab over to this, just clear this out for a second. And if we look, I believe it was last Thursday. This is actually a really good example. I want to show you guys. Okay, yeah, I think it was around here. I'm gonna have to check my my trade journal potentially here. Give me 1 second. Okay, so it was actually GU, so I pulled it up here. And again, this is just to illustrate, right? When you have low volatility in the market, again, sometimes it makes sense not to trade it, right? So I was looking at something here. I believe it was this zone that I entered off of. Or you know what it was? No, sorry. It was this zone, and I had covered the high. So something kind of like this. And I was holding it for about 2R. Targeting this, right? So I just entered the market, if you're wondering, right? It seems like I entered in the middle of nowhere here, but I covered the high. I was tapped in here. I held through this for about an hour or so, and then I watched price retrace all the way back. I had my break even here, took me up break even, right? So I gave up 2R, but really I didn't know, right? So I mean, that's the reason I held it. I stuck to the plan, right? At the end of the day. But when you're in market conditions like this, right, stuff like this is going to happen, right? So you may want to adjust for it, and when you don't have volatility, don't expect volatility to just come out of nowhere, right? Usually what starts volatility is these high impact news events. So again, we don't trade high impact news. I don't necessarily like trading high impact news weeks. It doesn't mean I'll stay out all the time, but like this week as an example, I didn't take any trades. There was just no point. I didn't see anything. Of course, I observed the market, but I didn't see anything good. And that leads me to my next point. When we have high impact news days, same thing, right? If you're gonna trade, you can trade before it. Just don't expect a lot of volatility. That doesn't mean that they're isn't always volatility. Sometimes there is, but of course you want to exit that position, at least 15 minutes before that news hits, right? Because you can very easily get slipped out of that position. It can slip through your stop loss, and you can take multiple negative of your stop loss, right? So rather than being -1R, it can very quickly slip into -7R, right? And then maybe you blow your account, right? So I don't want that to happen to you guys. Again, it's happened to me. The biggest slippage I ever saw was -6. When I used to trade gold, I would sometimes see slippage without news, where I would get like -2. So depends on your broker and liquidity and stuff, of course, but just something to be a little bit aware of, right? Now, what's the last point I want to go over here, right? So I believe this is number 4. If we're in a poor mindset, right, or there's a certain condition where maybe we didn't sleep the night before properly, or that we're going through something in our personal lives that we think is going to affect our trading. Maybe we're going through a losing streak, right? Sometimes it makes sense to actually just shut the charts off and not trade for that day either, right? I mean, in some cases, of course, you can observe the chart, but if you're tempted to trade and you're unable to control that impulse, it's a good practice to just practice not actually engaging with the markets, right? Or even looking at the charts at all, right? Can you be patient enough and have enough discipline to not open your MT4, MT5, or trading view charts? I mean, it's up to you, right? That boils down to each person. I know for me, I get antsy if I don't take a trade at least once a week, but that doesn't mean that I have to trade every week. I mean, there's certain months where I'll do really great at the start of the month, and there is really no point in trading the rest of it, right? Other than to keep yourself sharp, in which case I would just say go ahead and pull the markets up and observe what's happening and maybe forward test it, right? But the other thing that I was going to say is when you have certain market conditions or whatever it is where you shouldn't be trading, of course it's a great opportunity to number one, either study the markets, whether you're doing it in hindsight or doing back testing. Of course, you can read books on trade psychology, or if you're a Phantom Trading member, you could go through the course, right? There's plenty of content in there for you to watch and learn from, and you can take what you learn and of course practice it on the charts as well. Nothing wrong with that, right? I mean, in fact, we encourage that. So I hope this video shed some light on how trading really is a seasonal type of business, much like any other business that is seasonal, right? It's a little bit, I would say, opposite of a lot of businesses. Some businesses, of course, are going to thrive in the summer and winter months. With trading, it's a little weird, right? Sometimes we see slower price action, less volatility, and again, it makes sense to stay out because otherwise you're exposing yourself to unnecessary risk, right? So remember, at the end of the day, our number one goal here is to manage our risk and maintain our accounts, right? If we are going to force trades and show a lack of discipline, then of course we up the chance of having a catastrophic failure with our actual trading, right? Or we blow an account. Of course, that's not the end of the world, but hopefully if that happens to you, you learn your lesson. I personally have never blown an account. Of course, I've lost funding and regained it and stuff like that. I think that happens to a lot of traders early on. But that's just my advice to all of you. Anyways, I hope you guys learned something from it, and hopefully you guys like these trading psychology videos. But yeah, I'll catch you guys on the next one. We have another really good trade psychology video that's coming out, so stay tuned for that too. All right, take it easy, guys. Bye.